We are analyzing the latest earnings of BigBear, but before that, read the disclaimer right here in the video description below, and also join us, TNSD, the most popular stocks of Wall Street. And I gotta tell you guys, what happened right here is very interesting. We're talking about a reporting earnings that is better than expected, and it's not very common. The surprising factor right here is more than 100%, and the estimate was minus 0.07, and the reported earnings was 0.01. Which means they enter into profits. Very important. We don't see many of those with this stock. The last time it happened was actually in September 2023. So right now, this 2.52 million is really relevant because not only it's rebounding and the general upturn is still there, but you know the overall vision is better, way better than before. On the other hand, and I gotta tell, I have to show you this because obviously there is the other side of the coin is not as positive. We're talking about despite the bid, revenue is declining 20% year over year. So that's kind of a red flag right here. And the profitability is still weak. So historically, negative earnings, negative operating cash flow, it's still there. We need to see, you know, something better than this. Valuation consensus models suggest the fair value is far below current price. This happens because this stock is right now we are experiencing some sort of hype. But on the other side, we go back to the other side. The company announced a 250 million acquisition, you know, of Ask Sage, a generative AI platform focused on defense government uses, which is expected, which is expected to bring around 25 million in annual recurring revenue. So if we have this negative number, and this actually in June 2025 was horrible, but this 25 million is gonna bring some stability because it's recurring. Still, we could experience bad quarters, but at least with this revenue, we could see at least 2 quarters per year that it could be in positive territory if they do things good. But still, if we go to the forecast, this is the bad thing about this stock. You know, the valuations right here is even though the average of these Wall Street analysts think the stock should go up more than 8%, and the most optimistic one more than 29%. Look at the revenue expectations and forecasts that we have right here. This is what I don't like with this particular stock. You know, this negative APS that we have estimated. Still, with this new revenue cash flow is important, 25 million per quarter. Oh no, per year, I'm sorry. We're talking about still negative numbers in the EPS. If we go to the annual, by the end of 2025, we're going to have an estimate of minus 0.93 of EPS, which is not good. But you know, in 2026 and 2027 it could be a little bit better. But still, I don't like, in my opinion, to buy stocks in negative territory, or at least with a forecast of negative EPS. You know, I prefer to invest when you see a forecast that is going into positive territory by the end of a year. You know, in this case, we're gonna have 2.5 years is still negative territory, and this is the forecast, the current forecast, so it's not good. A different thing would be, you know, to see by the end of 2027 an estimate of 1, you know, or 0.50. That would mean that they could enter into profits for good, but it's not there yet. So maybe we have to be a little bit patient, especially with the latest upturn, you know, because obviously this is very speculative right now. I'm talking about like a fundamental guy that prefers to the long-term vision. So for the long-term vision, I will wait a little bit, maybe a correction, maybe to see the fundamentals improving in the next years, in the next updates. And currently, this is the uptrend that we have right here. The uptrend. So if we go to the volume profile, and I'm going to show you the current volume profile right here, and we're going to see exactly, if I can find it right here, yeah. The price of control, the point control. This is important. Normally, the price tends to go to this red line, you know, the price of control, they call it. But also there is another area which is interesting. When you know the $7 area, there is a lot of volume right there as well. So it could happen, you know, that we could go again, and I already did, you know, the $7 area with this upturn today, but it could go back again, you know. So there is like 2 possibilities, that we go back to the $7 area or we go to the $4 area. I don't see the second scenario coming at least very soon, as long as the main support level right here remains active. If we see a breakout of the support level, that could be like a very dangerous situation, because this is a very volatile stock. If we lose that support level, we lose everything, and we could go back to $4 very, very fast. Even if we break out, at least they could buy the stock around around this area, the $4 area, because it's kind of strong. But if we lose that one, the last one is 2.38. So what do you think about this stock? Do you think it's a good one for the long term? Do you think it's completely speculative and just buy for the short period of time and then sell it? Leave your comments below and see you in the next video.